1,000 of them that are a part of our group, this is what they have right on their desk. Why? So that when we get together in the trading room, we're all looking at the same thing exactly the same way. Okay, I know some of you already have it. You got some experience with it because you're students of ours. Some of you are in a 60-day trial period, so you're getting used to it. Those of you that don't have it yet, or you're not in a 60-day trial period, don't worry about it. Let me show you how it works. If it makes sense, you want to give it a shot, I'll let you put it on your desk for 60 days so you can try it and test it before you have to make any kind of final decision on it. Okay, what I'm going to do is show you how it works so that when you get it, right, you know which buttons to push. And here's the thing, okay? This program is effective because no matter what currency you're looking at, you could look at any of these, the Australia versus the New Zealand. You could look at the New Zealand versus the US dollar. Up here, we got the euro and the Canadian. It really doesn't matter what currency you pick. And it doesn't even matter what time frame. We could look at things days at a time. We could look at things hours at a time. Look at this. We could look at things minutes at a time. Doesn't matter, because no matter what currency you pick and no matter what time frame you look at, this program is going to help you. You want to know why? Because it's going to answer the 3 questions every trader has to answer. Before they risk a dime of their money, you got to answer 3 questions. Well, the chart's going to answer them for you. What are the 3 questions? Write these down. First question you got to have an answer to if you're going to go be a trader. You better know which way is the market going. Which way is the market going? Okay, you have to know that. If you don't know that, you're just guessing. If you're guessing, you're going to lose your money. Well, this is going to tell me which way it's going. It is. That's the first thing it'll do looking at this chart. It will tell you which way the market's going, and that's going to give you a massive, massive advantage. But here's the best part. It's not going to just tell you which way you're going. It'll also answer the next question, which is what? Where and why are you going to get in? Because you want to know that. Where am I getting in? Why am I getting in? The program will answer that too. Then what? It'll do the last thing, probably the most important. It'll tell you where and why you're going to get out. Okay, and it does all this, like I said, before you risk any money. Okay, that's a program that's designed to help you. All right, now everybody wants to know, well, what makes it work so well? Right? Because why? You've seen other software programs before. In fact, this isn't your first webinar. You've been to other people's webinar, right? You went to the stock webinar. What did they do? They told you, we've got software and it's the greatest thing, right? And it's got bells and whistles and red light and green light. And if only you do this, you'll make $1 zillion. You've heard that before, right? And they told you they had the best thing going. And now I'm sort of telling you the same thing. And you're wondering, what makes yours better than theirs? It's a good question, but there's an answer to it. What makes this work better than anybody else's program is actually the way the Forex market works, because the Forex market is different than any other market. Okay, I've been telling you that since the beginning. The Forex is different because it does something that no other market does. And this is the thing that's going to work to your advantage. Write this down. The Forex market is the only market that repeats itself. Write this down. The Forex does the same thing, okay, over and over and over again. And because it does the same thing over and over and over again, okay, once you know what that thing is and you can make money at it just once, all that's going to happen is the Forex is going to do the same thing and you'll be able to make money at it again and again and again. Okay, now how does it all work? All right, I'm going to show you. This market develops patterns, okay, patterns. Now we're going to find the patterns on this chart using these red and green things here called candlesticks. Okay, now most of you have seen a candlestick chart before, so I'm not going to go into some big dissertation about candlesticks. I'm going to keep things simple. All right, but what you need to know is this, okay? These things, these rectangles on the chart, those are called candlesticks, all right? Every one of them represents one day in the market. How do I know? Well, take a look. We're looking at a chart right now of the New Zealand versus the US dollar, and this is the 1 day, look at this, candlestick chart, which means every one of these candles represents a day in the market. Now, some candles are green, some candles are red. Why? Because on green days, okay, write this down, the market's bullish. On green days, the market's bullish. And that means what? The buyers are in control, driving the price up. So if you see a green candle, it means the market was up for that day. What if you see a red candle? Well, that's bearish. Okay, what does that mean? The sellers were in control, driving the price down. So if you're just looking at one candle, you can see, right, some good information on it. At the very least, you're going to see which way the market was going on a given day. Over here, what do you have? You got your price. Whoops. Over here, you got your price. That's your exchange rate. Okay, down at the bottom, you got time. Well, here's what ends up happening in the market. Yes, each individual candle, right, has some value. But when you start putting the candles together, that's when the market comes alive, because that's where a pattern emerges in the Forex. What do I mean? Well, look at this. You see what happens when you put a bunch of green candles together? The market's trending up. Now, what happens over here when you put a bunch of red candles together? The market's trending down. Now take a look. What do you notice on the chart? Well, sometimes the market's going up, obviously, and sometimes the market's going down. That just makes sense. What you notice, though, right away is that the market never goes straight up or straight down. What is it doing? It's moving in these waves. Okay, it's moving in a pattern. Well, the way the Forex moves is it always moves in what's called, you got to write this down, an ABCD pattern. The Forex always moves in an ABCD pattern. This is how the market works. Everybody always says, show me how it all works. Well, this is it. The Forex moves in an ABCD pattern. Let me show you what I mean. We're going to come over here to the left of the screen. You see this low price right here? That is the beginning of my pattern. So you know what I'm going to do? I'm going to give it a label. I'm going to call that letter A. Okay, now if that's letter A, that's the beginning, a low price. What happens? You can see it. The buyers take control of the market and they drive the price from a low to a high. Well, when we get to that high price, I'm going to label that also. That's going to be letter B. So now I've got low price A, high price B. My pattern is starting to take shape. But what happens when we get to letter B? When we get to letter B, the market stops going up and it pulls back down. You've seen that before. Nothing ever goes straight up. It goes up for a while, but then what? It pulls back down. Well, when we pull back down to a low price, I give that a label also. That's letter C. So now I got A, B, C, and what happens after that? The market rallies again, nice and strong, till we get all the way up here to this high price. That's going to be letter D, and that's the end of my pattern. So what I've just shown you is a complete pattern in the Forex. That's a complete ABCD pattern. Do you see it? ABCD. That's a complete pattern. But now that pattern is over. It's what happens next that's so awesome. What happens next, gang, is all the market does is repeat itself. It does another one of these ABCD patterns, except now look, instead of going up, it's going down. Now, where does it start? Right where the other one ended. So if this high price here was my old letter D, that high price becomes now my new letter A, the beginning of my next pattern. What happens next? The market falls down to a low price. That's letter B. Then what? The market rallies nice and strong till we get to a high price. That's letter C. Then what? The market just about falls apart, right? Down to a low price. That's letter D. That's the end of that pattern. And what happens next? You can see it. We start it all over again. Now, you're not an expert yet, but you're very close. As a matter of fact, if you can see the patterns, I can show you how to make money with it. So let me know if you can. You don't have to be an expert yet. What I need to know is if you can see those patterns. So if you can, I want you to go to the chat box and I want you to type ABCD. Come on, type ABCD in the chat box, okay? If you can see the pattern. Come on, type ABC and the D in the chat box if you can see those patterns. Can you see them? Type ABCD. I need to know if you get this. If you don't get this, you're missing it. All right. But if you do, I can show you how to make money with it. Good. Look at that. ABCD. ABCD. Fredette, again. Wow. Good. Good to have you. Rick is here also. Charles, Bobby, Tamaris. Good. Thank you, John. Diane. Okay. Everybody can see the patterns. Raymond, don't think I missed you. All right. So now what? Now you got to learn about the patterns. And here's what you need to know. In the Forex market, these patterns are not random. What do you mean? A lot of people think the market's random, right? It sort of just goes up and down and you're lucky if you can make money at it. That's what most people think, right? Is that markets are random, and they might be. Other markets, not this market. This market is not random at all. In fact, you have to write this down. This market, these patterns are very natural, okay? They're repeatable. They happen over and over again. But here's the best part. Those patterns you're looking at are predictable. Now, when you see that word, that gets your attention. You know why? It got my attention. I said to the chief, what do you mean predictable? He said, Joe, if those were predictable patterns, do you think that might help you? I said, of course that might help me. What, do you have a tool in there that can show me, right, which way we're going to go? Because if you have a tool that can show me which way we're going to go, that's going to give me a nice advantage. He said, if I had that, that would help you. I said, yeah. He said, what if there was a tool that could do that, but it could do more? Not just tell you which way you're going. What if it could tell you how far you're going to go before it happens? Do you think you could make money with that? You know what I said to him? If you have a tool that can do that and it works, right? It's got to work, right? But if you got one that does that, anybody could make money with it. He said, Joe, we got a tool that does that. It's built into the program. I'll show it to you. So I'm going to show you what the chief showed me. Come on, let me show you what this is. Okay, it's called the Fibonacci tool. It's built into the program. I'm going to demonstrate it for you. All right, and if you haven't been taking notes up to this point, now's a good time to start. All right, because this here is the star of the show. All right, the Fibonacci tool is based on something called the Fibonacci sequence. Now, what in the world is that? If you don't know, write it down. I know a lot of you, oh, the Fibonacci, right? But a lot of you are brand new. So I just want to make sure that you write that down, because I got to tell you about the Fibonacci, just a couple of seconds worth, so you understand the foundation of this whole thing. What in the world is the Fibonacci? Well, it's not a what, it's a who, it's a person. Fibonacci was a mathematician back in the 1300s. Now, he became famous because he discovered a sequence of numbers. Okay, this sequence of numbers is called the Fibonacci sequence. And if you look this up, I know some of you are going to Google it, there's no doubt. You're going to see that this sequence of numbers is important because this set of numbers can measure everything, okay, in nature. In fact, if you look it up, you'll see that it's called nature's numbering system, because what Fibonacci figured out was important. He figured out that everything in nature can be measured by this set of numbers, because everything follows a natural, and here's the key word, predictable pattern. And I'm going to show you what I mean by this. Everything follows a natural pattern. What are you talking about? Well, I'll show you. All right. Take a look at a pattern you're used to looking at. What's one that comes to mind? A weather pattern, right? Well, a weather pattern isn't just some random thing. A weather pattern, right, is a natural occurrence, and it occurs in this shape. That's not a mistake. It occurs in that shape because that's a Fibonacci sequence. Oh, that's pretty fascinating. What else does this work on? All right, think about this for a minute. Have you climbed a flight of stairs lately? Do you really think the flight of stairs was shaped that way because it was just random? No, of course not. It's shaped that way mathematically because it follows the Fibonacci pattern. Well, what else does? Look, you go pick a flower. Anything in nature this works on, because why? A flower doesn't just grow randomly, it grows perfectly. The center of a flower is round, okay? The petals on a flower form in a perfect spiral. That's not random, it's a natural pattern. Well, how many petals are on the flower? 21. That's not a mistake either. That's a Fibonacci number. This works on everything, including you. Look down at your finger, right? You see your fingerprint? Look in the mirror, look at your ear. Okay, your ears, my ears, her ears are not all the same, right? They all look about the same, don't they? That's not an accident. It's because that's a natural and predictable pattern. Here's the one that got me, the way a tree grows. A tree doesn't grow randomly. It starts with one trunk, 2 branches, 3, 5, 8, 13, 21. That's how a tree grows. Well, that's not a mistake. Look at the Fibonacci. 1, 2, 3, 5, 8, 13. You see this? Everything follows this pattern. And most people look and say, well, that's fascinating. What's it got to do with this? It's got everything to do with this. Why? Because the chief said, wait a minute, we're following a pattern. What if this is natural and predictable? This is a financial market. We can make a lot of money with that. What if we put the Fibonacci in here and it works? That was his idea. Well, that's what he did. He put the Fibonacci in here. Turns out it does work. He made a couple of $1 million off of this. And people came and said, how'd you do it? And he said, it's the Fibonacci. Want me to show you? And of course they said yes, and he did. And they told a couple of friends, hey, look at this, this works. And they came and he showed them, and they told a couple of 100 people. And then they came and they told a couple of 1,000 people. You understand? Right now we have 30,000 people around the world that are doing this. Okay, and you can do it too. I'm going to show you how to do it right now. All you have to do to make this work is bring up a chart right on your desk. Okay, you know what your job is? Write this down. You got to find the pattern. Write this down. This is your job. You have to find the pattern. Well, how do I do that? Well, you got to look for the low prices and the high prices and what we call the U-turns. Okay, the U-turns. Now, what in the heck is a U-turn? Well, when you're looking at the candles and they make a U shape, that's a U-turn. The bottom of a U-turn, low price. You give it a label. There's letter A. Look at that. You found the beginning of the pattern. What do you look for next? The next U-turn. Here it is, but it's upside down. You see that? It's an upside down U shape. That's still a U-turn. The top of it is a high price, so you give it a label. Now you got A and B. Okay, look at what happens next. You see those candles, how they make a U shape? That's the next U-turn. What do you got right there? A low price. So you found U-turn, U-turn, U-turn. Now you got A, B, and C. All you have to do now, gang, is what? See, now that you've found the pattern, see if it's natural and predictable. How in the world am I going to do that? I'm going to show you. All you have to do, and I'm going to clear this out a little so you can really see it. If you want to see if this is a natural and predictable pattern, you come up here to the Fibonacci drawings tool. You see this square right there? That's a menu. What you're going to do is you're going to click on that, and it's going to drop down a menu. First thing you see is the MTI Fibonacci tool. We invented this. Nobody else has this. Okay? You're going to click on that. Now watch what happens when you click on that and you come over here to this pattern you found. You're very simply going to draw a line from A to B, and that Fibonacci tool is going to show up on your screen. See what I did there? I clicked on that, and I came down here, drew a line from A to B. Now what? Now the Fibonacci tool shows up. Okay, there it is, and it sort of looks like a step ladder. Okay, and it's color coded. What are those numbers? Those are the Fibonacci numbers. Okay, it looks complicated, but it's not. All that's happening when you draw the line from A to B is it's measuring the first part of the pattern. But when you get to letter B, what happens? Well, the market stops going up and it pulls back down. This is the next part of the pattern. The market pulls back down until what? It hits a low price, and then what happens? Then the market makes that U-turn. Well, what you're going to have to notice once you find that U-turn is that is low price C. And what you have to notice as a trader is where that low price is and how it lines up with one of these Fibonacci numbers. That's going to be important. Why? Because some people call these Fibonacci numbers down here, they call them energy levels. In fact, I want you to write that down. Right? Some people call these Fibonacci numbers energy levels. Okay? I call them a little different to make it easier to remember. I call them trampolines because of what they do to the price of the currency. Now, watch what I mean by this. You're so close. Watch this. Watch this. The market's pulled back down to this low price, right? As soon as it got there, it stopped going down. When it did what? When it lined up with this red line right here, this red Fibonacci number, this energy level. Okay, I call it a trampoline. Why? Because what happens when you jump on a trampoline? You go bouncing off in the other direction, right? Well, look what happens to the price of the currency. When it comes down here and lines up with this red trampoline, boom, it goes bouncing off in the other direction, right? What's happening right here, and you can see it with your own eyes, is the market's got energy to the upside, right? I'll keep it simple for you. Right there, the market's going up. And if you knew that in real time, think about it. If you knew in real time that the market was going up, you'd know exactly what to do. Wouldn't that give you an advantage, right? Yeah, if it's going up, I mean, buy low, sell high. That's how money's made. It just makes sense, right? And if that's all this could do, okay, you'd have to have it. It would give you that much of an advantage. But here's the best part. It does more than that. Not only will this tell you how far, which way you're going, it'll tell you how far you're going to go. Now, how in the world is it going to do that? It's actually pretty simple. If you want to know how far this is going to go, all you have to do is match the color that you're bouncing off of down here with the same color up here. That'll tell you where the end of the pattern is. Let me say that again. Okay, if you want to know where the end of the pattern is, you got A, B, and C, right? You want to know where letter D is, all you have to do is match the color of the trampoline you're bouncing off down here with the same color up here. That'll tell you where the end of the pattern is. You want to see if it works? Watch this. Look, we came down here and we're bouncing off the red trampoline, right? Boom, we're going up. But we're not done going up. The market keeps going up. It makes higher lows and higher highs until what? Until it gets all the way up here to letter D. That's the end of the pattern. Now, why is letter D right there? Watch. Because that's exactly where it's supposed to be. Because this is not random at all. We've bounced off red, gone to red, A, B, C, D, and we finished a Fibonacci pattern. Now, the first time I saw that, I was on the edge of my seat. You know why? Because I understood it, right? If you can tell me where the market's going up, okay, and I buy it, and then you can tell me ahead of time where the market's going and I sell it, what does that mean? That means this area right in here, that's money to be made. You want to see how much? Watch this. I'll measure it. I got a measuring tool. And when I click on this and I say, okay, let's say if I bought it here and sold it here, how many pips would that be? Well, it says it right in the middle. You see where it says range in pips, 225? You see where it says bars, 17? Here, let me put that on the screen. This is 225 pips in 17 bars. Well, what does that mean? That means if I did a one-lot trade, right? I bought this currency. I gave my broker $2,000 at the beginning. My broker held this for 17 bars. Well, each bar is a day, right? So that's 17 days. At the end of 17 days, my broker gives me my $2,000 back plus $10 a pip. So what does that mean? That means what you're looking at there is a $2,250 profit or a 112% return on investment. Not 12%, 112%. And not in a year, right? A lot of people, I made 12% in a year. That's nice. This is 112% in 2 weeks. If that's even possible, you got to look into this. Well, that's what this is. And I just showed you that it's possible. There it is right in front of you. Okay. Now I know what you're thinking. Okay, that looks pretty good, but anybody can show me something one time, right? You got to show me that that works more than once. I can show you this works over and over again. You know why? Because the Forex does the same thing over and over again. It keeps doing this ABCD pattern. You want to see if it works? Watch this. We got another ABCD pattern right here, don't we? I mean, how did we find it? Well, there's U-turn A, U-turn B, U-turn C. Everybody can see that, right? Well, if you want to know if this one is a natural and predictable pattern, what are you going to do? Here, I'll clean it up and show you, but you're going to do exactly the same thing you did a second ago. All right, you're going to come up here, get your Fibonacci tool. There it is. You're going to click on it. Okay, you're going to come over here and you're going to draw a line from high price A to low price B. Now what? Now you can see the next pattern. You see this? This one's over. Over here, that's over. Goodbye. That one's done. But now you got the next pattern. And what do you notice? The market came down to this low price. And what happened? We rallied all the way up here to this high price. But when we got there, what happened? We stopped going up. And that's when the sellers stepped into the market. So what's happening right here is we're making a U-turn to the downside. Okay, we've got energy to the downside. And that's nice to see, but where are we going? Well, that all depends on letter C. Where's letter C? Remember back here, letter C was lined up with the red line. Where'd we end up going? Well, if we bounce off a red, we're going to red because that's how the tool works. Now, somebody said, what if it bounced off a blue? That's a great question. Here, let's cover that because you have to know that. We're going to do this a bunch of times, so you got to know how the tool works. Okay, if the market had pulled back down, let's say it did, but it pulled back lower before it made that U-turn. Well, then you would have to realize that letter C would be down here, lined up with what? With the blue trampoline. If that's the case, okay, the market's still going up, but what's it going to do? It's going to go up, but only till it gets to the blue line. Because you're bouncing off of blue, you'll only go to blue. Everybody will say, why? That's how it works. You got to match up the color. And it all is based on where is letter C? Where is that U-turn? And you probably already figured out how the last one works. If the market comes all the way down to here, and then it makes a U-turn off this green trampoline, the market's still going up, but only to the green line. Now, that's how it works. Okay, you got to worry about how it works first. Then you're going to see that it does work. Okay, but here's what I want you to do. Remember how it works. How do you do that? Write this down. You just got to match up the color. Red goes to red. Okay, blue goes to blue, and green goes to green. Okay, red goes to red, blue goes to blue, green goes to green, and we make our money. We make our money from C to D. Those are the rules. Okay, write that down. Red goes to red, blue goes to blue, green goes to green, and we make our money from C to D. You want to see if this works again? Watch this. What happened over here? The market came all the way up till it got to where? This high price. Then the sellers stepped into the market. Sellers are going to do what? Drive the price down. How far should it go? Well, if this works, you should go from red to red, right? Look what happens. Boom, it goes right to it. Why? It's not a mistake. It's A, B, C, D. It completes a Fibonacci pattern. That, my friends, is how it works. Somebody just typed, wow. That is a wow. That's awesome. And what I'm going to tell you is what you just learned is the most important thing you are ever going to learn when it comes to trading the Forex. Not because I'm teaching it to you, but because that's a fact, because this is how it works. Everybody always says, come on, show me how it works, right? Well, this is it. This is how it works. And if you got this, gang, if you understood that, now it's not enough just to know, right? Now you got to take that and do something with it. Well, now you're ready, because now that you know how it works, you can make some money with it. How am I going to do it? Here's what you're going to do. You're going to get this thing on your desk. All right. You're going to pull up a chart. I don't care what chart you pull up. You know why? Because all you're going to be looking at is candlesticks. There's nothing to be afraid of. Okay. You're going to be looking at the same thing we've been looking at. Now, what do you have to do? What did I tell you your job was? You got to find the pattern, right? Where do you start? You got to look for the first U-turn you find. Don't tell me you can't see it. There's the U-turn. All right. Okay. There's low price A. You see that? What do you look for next? There's another U-turn. Right? Oh, there's high price B. You see that? Now your pattern is taking shape. What do you got over here? Looks like another U-turn. So now you just found what? A, B, and C. Right? What don't you have? D. Why not? Because it hasn't happened yet. It hasn't happened yet, but you know where to find it. You come over here, you get your Fibonacci tool, you click on it. There it is. You come over here, you draw your line from A to B, and now what do you have? Now you can see the pattern. Okay, and what's happened here? Watch. The market's pulled back down to this low price. Now what? It's bouncing right off. You can see it, this red trampoline. Now look at how that's almost a perfect triangle. You see that? That's not a mistake either, right? These Fibonacci numbers, the chief will tell you, are super important. Okay, and if you bounce right off of it like a perfect triangle, that's because we're dealing with the mathematics of the whole universe here. All right, this is how everything all sort of fits together. Right? Most of you don't even care about that. What do you care about? You want to know if that thing works and if we're going to go from red to what? You want to know if it's going to go up here to the red line. Why? Because you figured it out. Okay? You figured this out, gang. You figured, yeah, Joe, if that thing's going up, I mean, and you can see it with your own eyes that it is, and you can tell me that it's going to go to that red line, well, I mean, that's how it works, then what have you just done? You've just identified a profit opportunity. There it is right in front of you. You want to see what that's worth? Here, I'll measure that one too. I'll click on that, draw my line from here to here. That trade would be worth 217 pips. 217 pips. Write that down because you got to make a decision on this. What do you mean? You've got to make a decision. Not me. You do. All right? What are you going to do with this? Well, it's based on how confident you are. How confident are you right now? Answer, not very confident. Why not? Because you've only been doing this for an hour. So what are you going to do? You're going to just let this go by? There's 217 pips there, right? If you're not confident, do it in a practice account. Do it in a practice account. You got to see if it works, right? If it doesn't work in a practice account, you don't lose any money. But what if you do it in a practice account and it works? What are you going to tell yourself? Holy cow, that thing went up 217 pips. Let me see if I can do that again. And then maybe you do it a third time, a fourth time, a fifth time, however many times it takes for you to finally have the bell go off and say, holy cow, this works, right? And once you do it 7 or 8 times, what are you going to say? I'm leaving money on the table at this point. It works. I got to start doing it for real. Now, where did I tell you to start? By mortgaging your house? Nope. I told you to start by doing what? Trade a micro lot. It's a $20 trade. Right? If it doesn't work at all, the worst that happens is you lose $20. Don't tell me that this wouldn't be worth a $20 trot. Okay. But what if it works? That means what? You get your $20 back. Plus, you get 10 cents a pip. So what you're looking at there would be worth $21.70. That wouldn't be a bad little profit. What if you did it as a mini lot? $200. Okay. Still not a lot of money. If it didn't work at all, you lose $200. That's not going to put you under a bridge. Okay, you'll be a little disappointed, but it's $200. But what if it does work? Wouldn't it be worth $200 to find out? Because at the end of this trade, if it goes up to the red line, you get your $200 back plus $1 a pip. Now you're up $217. Okay, why did I tell you, though, to circle standard lots on your paper? Because what you're looking at right there, gang, at $10 a pip is what? $2,170. That is serious money. You understand that? And that's what you came here to learn how to make anyway. You didn't come here to learn how to make nickels and dimes. You came here tonight to say, show me how to make serious money. Well, I don't care who you are. $2,170 is serious money. In fact, that's 108% return on investment. If that's even possible, you have to look into it. Okay? Well, I can show you it's possible. Watch. I just go forward in time. Look what happens. One day, boom, market's going up. Why? It's not an accident. It's bouncing off that red trampoline. Second day, keeps going up. Now, does it go straight up? No, they don't go straight up. But it makes higher lows, higher highs. Look what happens on the 1, 2, 3, 4, 5th day. Look what happened on the 5th day. It went right up, and look. I'll draw it. It kissed the line. It goes right up, and it kisses the line. Why? Because that's what it's supposed to do. Because this isn't random. It's A, B, C, D. You bounced off a red. You went to red. 5 days later, you were up $2,170. Do you understand that, gang? Right? Usually when I get to this point, I want you to understand. Most people say, holy cow, this is about the best thing I've ever seen. Well, if this is even possible, okay, you got to give it a shot. You want to do that? We let you do that. What do you mean? Well, if you want to give this a shot, if you say, okay, I got to give that a shot, okay, what you can do is go to that same chat box, okay, and what you can do is put in a good phone number for real. Because at the end of this, we're almost done. Okay, what I'll do is reach out to you or have one of my traders do it, right? We'll reach out to you. We'll give you all the details to get this thing on your desk, the download link, the username, the password. You understand what I mean? And I'll let you put it on your desk for 60 days before you have to make any kind of final decision on it because I want you to see that it works. Okay, that's a fair way to do it, right? You want to see that it works? I'll let you put it on your desk for 60 days before you have to make any kind of final decision. Because I want you to see it work with your own eyes. I want you to push a few buttons. Okay, the way that it comes alive for you, I can keep doing it, and I probably will. Okay, tonight, show you a couple more. But the fact of the matter is, if you're thinking, all right, I got to try that. That's awesome, right? Well, then put your phone number in the chat box. And here's the thing. I got 180 of you here. Usually, when I show this to people, you know how many people want to try it? Everybody. Why? Well, who wouldn't want to try this? If that was even possible, you'd have to try it. Right? So here's what we do to keep it fair. We take you in order. So you don't have to put your phone number in now if you don't want to. But what we do is we take you in order because that's the fair way to do it. If I got 80 people that want to give it a shot, I mean, what can I do? The first person that puts their name in, you get first crack at it. Then the next person, we'll go to the next one. Then we'll go to the next person. You understand what I mean? So you don't have to do that if you don't want to. But I'm going to tell you that if you at least put your phone number in, guess what? You get a good spot. You understand what I'm saying? You don't have to do anything you don't want to do. If it's not for you, it's not for you. But I think a lot of you are good. Look at that. A lot of you are saying, all right, let me give it a shot, Joe. This is about the best thing I've seen. Okay. Just mess with it a little bit. You got tonight to do it, a little bit of time tomorrow before the chief gets a hold of you. Okay. If you think you're learning something from me right now, wait till you get to the chief. It's awesome. All right. So good. A lot of you are saying you want to try it out. Somebody else just said, I want to see a couple more. Well, I'm going to show you a couple more. Okay, if you need more information, that's why I'm here. Okay, and I'm going to show you a couple more, but here's what you need to know. This works in all the currencies. Okay, write this down. This works in all the time frames. My day traders want to know, does it work on the 1 hour time frame? It works on all of them. Okay, it works in all the currencies and time frames. It's measurable. You can see that. It's repeatable. Okay, repeatable. This is a big deal. It happens over and over again. That's why the formula works. What's a formula? A formula is something that works over and over, right? That's why they call it a formula. Well, the reason it works over and over is because the market keeps doing this over and over. Right? That's how it all fits together. It's measurable. It's repeatable. Best part, it's predictable. How do I know? I know what's going to happen next. And it's probably a good idea to know what's going to happen next. Why? Because if this is time to take my profit, I better know that. The last thing I want to do is give my profit away. Oh, no. What just happened there? What do you mean what happened there? What do you mean what happened there? Well, it looks like the market went down. It did. But that doesn't concern you, right? Because you have already done what? Booked your profit when you got to letter D. You see this? There's letter D. See that? Same way you did it back here. You book your profit. Why? Because then you start a new pattern. Then over here, what do? Well, you finish that pattern. You start a new pattern. So what's happening over here? This should not surprise you anymore. All that comes next is look at another pattern. A, B. Look at, you see it? A, B, C, D. And it does it over and over. Somebody else just typed awesome. Don't type awesome. Okay. You got to understand that this works. As a matter of fact, look, I said it works on all the currencies. I was going to give you a couple. Well, let me just show you that it does. Okay. And the fact of the matter is, look at, all right, I've got a currency where let's just pick any one of these. Here, let me pick the Euro, New Zealand dollar. See, this is a 4-hour chart. Now, here's what you need to know, gang. Everything you are looking at here, okay, is the Fibonacci in action. Now, some people say, well, what are those arrows? What's going on? Well, you haven't learned everything in one sitting. Okay, there's some other things you have to understand and know. But the one thing you have to realize is everything that you see here is a Fibonacci pattern. Okay, this one is following a trend. Now I'm going to draw a line. You see that line right there? You see the line that I just drew? That's called a trend line. Okay, now watch this. All right, this is a trend line. Now, why is that important? Well, because every time the market tries to go up, look what happens. It hits the trend line and it sells off. Then it tries to go up again, but then it sells off. It keeps bumping into this trend line. You see that? Well, that trend line is holding the market down, okay? And if it's holding the market down, that means what? It's keeping it from going up, so it's resisting. We call that a line of resistance. It's holding down the market. Well, why is that important? Because on this side of the trend line, okay, that's called a sell zone, okay? On this side of the trend line, well, that's what we call the buy zone. So what do I want to do? Well, if you're going to be a trader, right, if the market's going down, you want to trade in that direction. You don't want to be buying something if it's going the other way. Well, this is going to show you that direction because you're in the sell zone. Well, I want to see if it works. All right, let's just say, let's just do this as an example. Okay, hold on. I'm gonna widen this out just a little bit. Let's just do this as an example. You see that high price right there? You see how the market came up and then it made this big U-turn? Let's say that's a high price. Okay, I'm going to click on that and call that letter A because you got to make sure this works, right? What if the market comes down to this low price? Well, if Joe, you're just going to show me the basics, yeah, that's letter B. Okay, now didn't the market rally to a high price right here? Well, if that's A, B, and C, this is a totally different chart, right? If this really works, then I should be able to come up here, do the same thing you showed me. Click on that and draw that line from A to B, right? Well, when I do, look at what happens. The market's gone from A to B. Then what? It rallied to a high price. There it is. Then you see those red candles? The sellers took over. And now, because I've come up to this high price right at a Fibonacci line, look at that. Again, we're bumping right into one. That's not a mistake either. Okay. Look what happens. The sellers don't just take over, but they drive us down till we finish the pattern. A, B, C, D. Is that awesome? You want to know what's awesome about this? Watch this. Because that particular trade, gang, was worth how many pips? That's 290 pips. Now that seems like a pretty good number, but it says 24 bars. Okay. Well, here's why that's kind of nice. Because we're not dealing with a day chart. This is a 4-hour chart. So that 290 pips, okay, 290 pips occurred in 24 bars, right? 4 hours a piece means this happened in 6 days. So if you did this trade on a Sunday, okay, you did a one-lot trade, you got that direction, okay, you could see everything that was happening, and you understood, can I really trade in that direction? You could trade in both directions. We're going to teach you how to do it, okay? But in 6 days' time, at $10 a pip, that would have been worth a $2,900 profit. in 6 days. Now, you might not be impressed with that. That's okay. Trade 2 lots. Can I do that? If you got $4,000, of course you can. Okay, you can do whatever you want with your money. Okay, the fact of the matter is if you got $4,000, each of those pips would be worth $20 each. So at that point, you're making $5,800 in 6 days. Okay, that's a big number. I don't want to scare anybody, but if that's even possible, right, it might be worth a look. But I don't even want to look at that one. I want to look at this as being $2,900. And instead of that taking 6 days, what if that's the only trade you did for the month? You know what you just did? You paid your mortgage. You paid your mortgage, your car payments, your phone bill, your electric bill, $2,900. You don't think that's going to be life-changing? I know that it is. Well, you know, it's only a couple of $1,000. Well, that's this month. What if you could do it again next month? Just pay your mortgage. You could do this every month from home part-time. Don't quit your day job yet. But if this is something you can accomplish, okay, then guess what? It's like getting a free house. And that is something that's going to change your life, because now all of a sudden you got a little extra money in your pocket. It just makes things nicer. Okay, the chief knows that. You don't need to learn how to make $1 gazillion in order for this to be meaningful. I mean, if you could try to make $2,900 in a month, guess what, right? Then he can change your life. Guess what that comes out to? About 10 pips a day. 10 pips a day. If we can't try to make 10 pips a day, right? We've been doing it for 25 years. Guess what? Well, I wouldn't want you to do it with us either. Okay, but if I could try to make 10 pips a day, that's life-changing. And here's the best part of this. Watch this. Watch this. You ready for this? Okay. Once it completes a pattern, look what happens. You're still in the sell zone, right? So watch one of the techniques you're going to learn, okay? Let's say you missed the first one. All you webinar guys want to show us all the money we could have made, right? Well, what if I missed that one? Well, what if you show up and you see this is your U-turn? So let's do this. Let's let the old C become the new A, okay? What if the market pulls down to this low price, okay? Isn't that a B? And then the market rallies to a high price. That's letter C, okay? Well, if this really works, that should be ABC, right? Shouldn't that show me a Fibonacci pattern? Well, let's draw the line. There's A, there's B. Market rallies, red line. Take a look. You can't tell me it doesn't work if it finishes the pattern. You understand that? You can't tell me it doesn't work if it makes lower highs and lower lows. Look at, and it finishes the pattern. A, B, C, D. It doesn't go straight down, but take a look. It works. How many times did that work? Well, look, even if you missed that one, or maybe you just needed that to build confidence. I want to see it work a couple of times. Well, then here, you got tools that you can do that with, all right? Just keep drawing those Fibonaccis until you finally tell yourself, you know what, I think this thing works. Because look, if it goes from red to red and we keep on doing that, okay, all of a sudden you're going to tell yourself, you know what, I think I'm on to something. Well, what happens if you see it work 1, 2, 3? Let's say it works a 4th time. Let me just make sure that this does work. All right, there's A, there's B. What happened here? We went to high price. That's the blue line. So then this should go to the blue line, right? Blue to blue. Look at that. It goes to it exactly. You see that? Blue line, blue to blue. All right, so there it is working 1, 2, 3, 4, 5 times in a row. Okay. At some point, you got to decide that you're going to give it a shot. But here's what ends up happening. Watch this. The market breaks into the buy zone. So while you were waiting for it to finish going down, okay, now I'm ready. Well, look what happened. The market, right, did another move, but instead of being below the trend line, now look, it's above it. This is called a breakout. This is called a breakout. So here you had 1, 2, 3, 4 chances to make money with this. And how much did you leave on the table here? Let me just count that out, right? That's about 700 pips. But it's okay. You wanted to make sure that it worked. Well, once the market breaks out, now you're in the buy zone. So now what are you thinking about doing? Just being a buyer. Can I do that? Of course. It's not hard. You come over here. If the market's going up, what do? You go ahead and you draw your Fibonacci, low price A, high price B. You see that the market is bouncing. It's going up. Now what? Well, if it goes up to that red line, there's money to be made. So I need to be buying this. Yeah, you're late to the party. Okay, how do you buy it? You come over here, you click on this button, you click on the buy button. You decide how big you want to do it, 10 cents, $1, $10 a pip. That's up to you. That's the fun part, though. You click on buy. Now you're in the market. When are you going to get out? When it goes up to that red line, you're going to open this up and click on sell. So mechanically, it is very easy. What's the hard part? The hard part is pushing that button in the first place. Why? Because you got to make sure that this works. You got to make sure because it's your money. Any guy on a webinar can tell you to buy something. something. You don't think that's a little easier for me than it is for you? Go ahead, buy it, right? What do you need to do? Not only do you need to know that it works, but you also need to know what? That your downside is protected before you go pushing the button. Well, there's a way to protect your downside. It's the last thing I'm going to show you. It's called a stop order. A stop order is going to build a floor under your trade. So that what? So that your downside is protected. Okay, so your risk is limited. Okay, you don't like risk. We don't like risk. Protect it. Okay, you don't like to lose money. I don't like to lose money. So you limit your risk. What do? You build a floor. You want to see what it looks like? Watch this. Here, I'll build a floor. Ready? 1, 2, 3, click. Now what? Now if I buy this, only one of two things can possibly happen. It's either going to go up and it's going to finish my pattern, or it's going to go down. But if it goes down, it can't go falling off a cliff, because if it hits this floor, my order stops. That's why they call it a stop order. I'll get taken out in 1 second or less, and it'll protect the rest of my money. So I move on to the next trade. Small loss, no big deal. Really, Joe? You're making sense. You see, I knew I was. What do you mean the rest of your money? Well, you're not risking the whole amount. You never risk the whole 20 or the whole 200 or the whole 2,000. That'd be stupid anyway. You risk a little fraction of it. If it goes against you, big deal. You take a small loss, you move on to the next trade. Am I making sense now? I know that I am, but here's the better part. You're not going to just put your stop any old place. You're going to put it in the place that makes the most sense. And if you're conservative, it'll be easier to remember, because why? Because if you're a conservative trader, you're conservative with your money. That's you. That's me. We're all conservative. Well, what does conservative start with? The letter C. Guess what? That's where you're going to put your stop. You're going to be a conservative trader, because what a conservative trader wants to do when they buy something is they want to risk as little as possible. You understand this? To make as much as possible. That's what a conservative trader does. And if you're a conservative trader, gang, right, you're going to risk as little as you can. Until what? Until what? You get into the trade, and then what? You wait till it finishes the pattern. Now, you're going to tell me this is an accident, that it goes right to this line. You couldn't possibly tell me that that's a mistake. It went from A to B and went from red to red. A, B, C, D. Is that awesome? And what that trade was worth, right? When the time came and we broke through that line, and you'll learn that technique is for entry. This trade right here that you're looking at was worth 251 pips in 44 bars. You understand that? That's not a very long time to wait to make yourself a couple of grand. Okay, now I see it works in both directions. You're going to see that it keeps working over and over. You want to know why? Watch this. Now you know how a good trade looks. Okay, this is not any old news. This is something, gang, that's happening literally while I'm talking. But watch this. If you're in the buy zone and you take the old letter C, turn it into the new letter A, you want to see this thing repeat? It's really cool. Low price A, high price B. Okay, what are you going to tell me? What are you going to tell me? That the market did what? It went from A to B, okay? Then it pulled back down to this red line. Now, if you want, you can tell me that it went from red to red exactly, just because it's all a big mistake, but it's not. That is a Fibonacci pattern. Do you understand? And once the buyers took over the market, once the bulls stepped into the market, they ran that thing up, because there's so many buyers out there. Now, how do I know that's a bullish signal? Well, I know how to read the candles. You don't even have to know how to read them. There's a tool here that'll tell you if it's a bullish signal. Here, let's look at for all the bulls. Ready? 1, 2, 3. I click on this. You see what happened here? This is called a bullish piercing line and a bullish engulfing candle. Now, that sounds like fancy trader talk. What it basically means, gang, is that's where the bulls stepped into the market. That is one of my favorite patterns, the bullish engulfing candle. Write that down. A bullish engulfing candle means what? Bullish. The buyers have stepped in. Engulfing, what does that mean? They've taken over. And if they're taken over, look what happens, right? They jump in the market, they finish the pattern, A, B, C, D. Now I know you're looking at this and saying, this is crazy, this is awesome. Well, look what happens next. You think it repeats itself again? If this one works, okay, you at least have to give it a shot. Well, this is the old C, so let's say that's the new A. This is the old D, so let's say that's the new B. Are you honestly going to tell me that this pulled back to a low price and it finished the pattern, okay? And look, there it is, green to green. Do you see it? And you don't think the Fibonacci's are important? It might have had a high price way up here. Look where that is, at a Fibonacci. Holy cow, this really works. Well, just add these three together. I mean, we're not talking about a whole lot of time spent. Okay, but if you added these three together, let's say this was 30 days worth of trading and you made 474 pips. That's what? That's not even, it's barely 30 days. It is 30 days, right? Because I'm looking down here. This is April, and now we're in May. So if that was 30 days and you made $4,500 off a $2,000 account, that'd be life-changing. I don't care if you made $1 a pip. In 30 days, if that's 458 pips, 458 pips, okay, even at $1 a pip, okay, what is that? That's $458. Okay, do that every month. You know what that is? That's a little Mercedes payment. Might be the small Mercedes, but it's a Mercedes. You understand what I'm saying? 458, that'll get you a little Jaguar lease if that's what you want, right? Or you put it away for a while. Okay, even if you, let's say you make half of this, $2,500 a month is $30,000 a year. You got 10 years to retirement, that's 300 grand, right? Oh, I don't know where I'm going to find 300,000 by the time I retire. Well, it's not going to come crawling out from under a rock. You got to give yourself a chance, man. That's what this is. The chief's 60-something years old. He knows what you're talking about. He knows specifically because so many people here are retired. And he says there's nothing to be embarrassed about if you got to 50, 55 and you're a little behind, right? There's 2008. We all dealt with that, right? Then we got a little behind. Some of us had to dip into savings. Okay, some of us are dealing with other stuff. You're taking care of an elderly relative, okay, and you're always thinking, oh, my kid needs a few dollars, right? But you're always putting yourself last. At some point, you got to put yourself on the map. And if this is a good way for you to get caught up, then you got to give it a shot. Because look, this is happening while I'm talking. I'm not showing you stuff that's not happening, okay? It's happening now. And if you want to give it a shot, pull a couple of charts up on your desk, right? Because if I've got the Australia and the New Zealand dollar and I can see, okay, I'm going to get it on my desk, Joe, if I better find a high price and a low price. And look at that, right? My spouse is going to ask me about this. And if I say, honey, it went from red to red, right? That's at least going to pass the spouse test so you can keep going. Well, what's happened here? Look what happened. If I draw using my automated tool, a smart trend line, I don't even know how to draw a trend line, then use the automated tool. If I click on smart trend line and come find a high price, 1, 2, 3, click, it draws the line for you. Now, what do you have over here? You've got, right, this line that was holding the market down. That was a line of resistance. So on this side of that, you're in the sell zone. You better write this down. This is the Aussie, New Zealand. Okay, and this is the 1-hour chart. You were in the sell zone. Okay, what have you done? You've broken through into the buy zone. So now the only thing you're thinking about doing is being a buyer. You understand that? The only thing you're thinking about doing right now is being a buyer. Now look what's happened. What used to be holding the market down, same line, is now holding the market up. This couldn't be any better. So what do? You got to draw your Fibonacci. How do I do it? You come over here if you want to do it this way. You can click on the Smart Fibonacci tool. Does that work? Of course it works. Here, watch. Let me look for low price. Ready? 1, 2, 3. Click. Look at that. Draws the Fibonacci's for you. 1, 2, 3 times in a row this worked. A, B, C, D. Let me see what this last one was worth. All right, hold on. You see this one right here? Let me wind this out. You see this one right here? A, B. Hold on. Because this is as recent as the day is long. This came down to the red line. Okay, there's letter C. Now, where's it supposed to go? It was supposed to go, look at that, it goes right to it. So if that's the case, how much was that thing worth? When the buyer stepped in, that was worth 72 pips in 5 bars, 5 hours. In 5 hours, you made $720. What do you think a good day trader does? Make yourself $720 a day, you're making $3,500 a week. Well, if this is so great, how come you're not doing it? I do it every day. I help my traders find opportunities. I show a lot of them the basics because they need to cover the basics before they go jumping into something. And a lot of you are chomping at the bit. You're saying, I want to make some money. Well, you can't just want to. You got to get out there and do something with it. Now, the fact of the matter is, look at, this is happening while I'm talking. That is a U-turn. And you can see that that's forming, can't you? Well, what if, just for the sake of conversation, what if this was your A and this was your B? And what if it was bouncing off this green line and you did this trade? Okay, watch this. If this is green to green, and that's legit, okay? Green to green means what? Your reward in this trade would be to 107.47. I'm at 106.08, so that'd be 139 pips. 139 pips. Right? One lot traded would be $1,390. Anybody else show you how to make $1,390 today? Okay, what would that be as a return? That'd be about 70%, right? 69% return on investment. Well, that looks good, but what's my risk? Well, your risk is going to be conservative. Your risk is going to be down here at letter C. So you're going to tell me, right, that you wouldn't take a shot at this if that was your reward or risk and this was your reward? Come on, you think I'm trying to hurt you? I'm trying to help you. I want you to do this trade. You know why? Because I want you to see the darn thing work. Because here's what you need to know, gang. You could do this all day. As a matter of fact, this circle is about 10 times bigger than that circle. Okay, but it doesn't even have to be, because what we do usually is trade 4-to-1 risk to reward. Now write this down, 4-to-1 risk to reward. This is the last thing I can show you because we're running out of time. But if you trade this way, 4-to-1 risk to reward means for every pip you risk, you want to make 4. So you're going to risk one to make 4. This will take all the pressure off. What do you mean? All right, let's just do this as a for instance. Okay, let's say this is just round numbers, 160 pips worth of reward. Okay, that means if I wanted to make 160, the most I'd be willing to risk is 40, 4-to-1. Okay, now let's say that's how you set up your trade. Okay, do that trade 5 times, but don't get it right every time. Let's say you get it wrong the first time, you're brand new. Oh, that's a bummer, right? Took a loss. Not a big loss. You lost 40 pips. Do it the second time. Lose again. Joe, I thought you said this thing worked. Yeah, but you're new. Maybe you pushed the wrong button. I lost 40 more. Do it a third time. What if you were 0 for 3, right? You'd probably be calling me on the phone. I'm telling you, gang, you could be 0 for 4, okay? But if you get it right just once, look what happens. You're wrong 80% of the time. If this just works one time out of 5, add them up. 40, 40, 40, 40 is 160. 160, guess what you did? You broke even. You didn't lose a dime, and you were wrong 80% of the time. That's a system designed to help you, gang, because it takes all the pressure off you. You could be wrong 80% of the time and still not lose anything. Most people, oh, our system works 92% of the time. Number one, that's nonsense. And number two, it doesn't have to. If you can get this to work just once out of 5, you don't lose any money. But now look at this. What if you can get it to work even less than half the time? What if this works less than half the time? You're making good money at that point. What if you can get this to work just a little more than half the time? Just a little more than half the time. 480 minus 80. Look at this. Just a little more than half the time. Guess what you just did? You made yourself 400 pips. You're killing it. $4,000. Did I show you that it worked a little more than half the time? I'd like to think I did. As a matter of fact, I don't care which of these I pull up. If I show you, look, the Fibonacci, and watch this, 1, 2, 3, right, over and over and over, and then I can do it again, smart Fibonacci, click on it again, over and over. It even shows me the one that's happening right now. Okay, it's right there. The market's moving sideways, but look, we're making a U-turn. What do I want to see? I want to see the bulls step into the market. And then what? That's a nice low risk trade. Euro Canadian, holy cow. I mean, think about it. Red to red, what's that price? What's that price? 162. I'm at 150. That'd be 1,200 pips. Okay, $12,000. You're not ready for that yet, but it's right there.